You imagine checking your bank account after 20 years of hard work, only to realize you've been running on a treadmill that's getting faster while you stay in the exact same place. You do everything right according to the script society handed you. You work more hours, you chase the next promotion, you upgrade your car to show everyone you've made it. Yet the financial freedom you were promised feels further away today than it did a decade ago. You are exhausted, you are stressed, and deep down you have this nagging suspicion that the game is rigged against you. Well, here is the uncomfortable truth. It is. We are told from a very young age that building wealth is a complex, high-stakes game reserved for math geniuses in expensive suits or day trading wizards with 6 screens in their basement. We are led to believe that to get rich, you have to be smarter than the market, faster than the algorithms, and lucky enough to pick the next NVIDIA before it rallies 20,000%. Yet the irony is that the harder you try to beat the market, the more you likely lose to it. Shockingly, while the average actively managed mutual fund carries an expense ratio of around 0.73%, or sometimes much higher when you factor in hidden costs, a simple total market index fund costs as little as 0.04%. That means you are often paying 18 times more in fees just to statistically underperform the very market you're trying to outrun. You are paying a premium for mediocrity, and that fee is compounding against you every single year, quietly eating away potentially hundreds of thousands of dollars of your future freedom. The financial industry has spent decades building a complexity wall to convince you that you can't manage your own money. Why? Because if you realized how simple it actually was, their multi-billion-dollar fee harvesting machine would collapse overnight. It's a systemic issue where brokers, insurance agents, and so-called advisors act as gatekeepers. They profit from your confusion by pushing products with hidden 12b1 fees, front-load charges, and redemption penalties, all while the actual market quietly compounds in the background without their help. But it's not just the guys in suits anymore. Now you open your phone and your feed is a constant stream of financial noise. You've got crypto bros promising you'll be a millionaire by Tuesday if you buy this coin with a dog on it. You've got doom scrollers telling you the dollar is collapsing and you need to buy gold bars and bury them in your backyard. And you have lifestyle influencers telling you that you deserve that luxury vacation on a credit card because, hey, you only live once, right? This is the trap. The noise is designed to trigger your fear and your greed. It keeps you paralyzed, or worse, it keeps you gambling. So let's strip it all down. Let's look at the philosophy known as the simple path to wealth. This isn't about getting rich quick, it's about getting rich sure. And it starts by understanding what the stock market actually is. Think of the stock market not as a casino, but as a self-cleansing organism. It automatically discards failures and promotes winners. When you buy a total market index fund, something like VTSAX or VTI, you aren't betting on a horse race. You are buying the racetrack. You are buying the relentless ingenuity of every major publicly traded company in the United States. When a company like Sears or Blockbuster fails to innovate, they fade away. They drop out of the index. You don't have to sell them. The index does it for you. And when a new giant rises, like Amazon or Google or whatever AI company is about to change the world in 2026, the index automatically captures that growth. You own the winners because you own everything. The numbers from the last quarter century prove this. Since its inception in 2000, a fund like VTSAX has returned over 700%. Think about what that period includes. It survived the dot-com crash. It survived the 2008 global financial crisis. It survived the global shutdowns of 2020. It survived the inflation spike of 2022 and the volatility of 2025. Through all of those end-of-the-world events, the market marched upward. Why would you spend your limited time and energy analyzing individual crypto tokens or chasing hype stocks when the S&P 500 has produced a 14.8% annual return over the last 15 years? Are you trying to find a needle in a haystack, or would you rather just buy the entire haystack and let the exponential trend line do the heavy lifting for you? Now, I know what you're thinking, but wait, looking at the news, this time is different. We have geopolitical tension, we have debt crises, we have AI replacing jobs. The most dangerous 4 words in investing are, "This time is different." In the 1970s, people thought the world was ending because of stagflation and oil crises. In the 80s, it was the Cold War. In the 2000s, it was the tech bubble bursting. Every single generation thinks their problems are unique and insurmountable, and every single time, the market eventually recovers and hits new highs. If you sit on the sidelines waiting for the world to be safe, you will wait forever, and inflation will eat your savings alive. So how do you actually do this? How do you stop playing the industry's game and start owning your life? It comes down to 3 rules, and they are boring, they are unsexy, they will not get you a viral TikTok clip, but they will make you wealthy. Rule number 1, you have to achieve FU money. This is the most important concept you will ever learn. FU money isn't about buying a yacht, it's about buying your freedom. It's having enough money set aside in investments that if your boss becomes toxic, or if your company demands you do something unethical, or if you just wake up one day and realize you hate your career, you can look them in the eye and say, no. You can walk away. When you live paycheck to paycheck, you are a slave to your employer. You are terrified of losing your income because you are 3 weeks away from ruin. But when you have 2 years, 5 years, or 10 years of living expenses compounding in an index fund, you move through the world with a different kind of confidence. You are untethered. Rule number 2, live on significantly less than you earn. Now, stop rolling your eyes. This isn't about clipping coupons or making your own laundry detergent or living in a cardboard box. This is about realizing that the standard American lifestyle is a trap designed to keep you broke. We are conditioned to inflate our lifestyle every time we get a raise. You get a promotion, so you buy a bigger house. You get a bonus, so you lease a luxury car. We spend money we don't have to buy things we don't need to impress people we don't even like. The simple path asks you to question what actually brings you value. Is that $80,000 SUV really making you happier than the freedom of not having a car payment? Is that massive house in the suburbs with the high property taxes and the endless maintenance really an asset? Or is it a liability that forces you to keep working a job you hate? And let's talk about that for a second. Homeownership. This is controversial, but hear this out. A house is a place to live. It is rarely a great investment compared to the stock market. When you factor in mortgage interest, taxes, insurance, repairs, and the opportunity cost of that down payment not being in the market, the returns on real estate often pale in comparison to a simple index fund. If you want a house for lifestyle reasons, because you want a garden or a specific school district, fine, buy it. But don't delude yourself into thinking it's your retirement plan. It's a consumption item that you live in. By choosing to drive a reliable used car, a Honda Civic or a Toyota, instead of leasing a new one every 3 years, and by keeping your housing costs low, you create a surplus, and that surplus is the fuel for your freedom machine. Rule number 3, invest the surplus and avoid debt like the plague. Debt is the opposite of wealth. High-interest consumer debt, credit cards, car loans, these are chains. They force you to work yesterday to pay for today. You need to eliminate them ruthlessly. Once you are debt-free, you take that gap between what you earn and what you spend, hopefully it's 20%, maybe even 50% of your income, and you pour it into VTSAX or a similar total market index fund. And then you do the hardest thing of all. You do nothing. You ignore the news, you ignore the panic when the market drops 20%, because it will drop. That is the price of admission for high returns. You don't sell when the market crashes. That is the moment you are buying stocks on sale. You hold, you let the dividends reinvest, you let the companies of the world work for you. There's an old parable about a monk and a minister. They were childhood friends who took very different paths. The minister became a high-ranking official, wearing fine silk robes and advising the king. The monk lived a simple life of contemplation. One day they meet, and the minister looks at his friend with pity and says, "You know, if you could just learn to cater to the king, you wouldn't have to live on rice and beans." And the monk smiles and replies, "If you could learn to live on rice and beans, you wouldn't have to cater to the king." That is the choice you have to make. Do you want to spend your life catering to the king, your boss, the bank, the credit card companies, just to maintain a facade of wealth? Or do you want to build actual wealth, the kind that buys you out of the rat race entirely? Your path to wealth isn't found in a complex algorithm or a secret crypto tip from a guy on Twitter. It's found in the discipline to buy the entire market, hold it through the storms, and let time turn your frugality into total financial independence. The market is volatile. The world is scary. The future is uncertain. But if you own the haystack, you don't need to worry about the needles. Stop checking your account every day. Stop listening to the noise. Build your FU money and take your life back.